Hi, it's Matt Lewis from TechView Wealth Advisors, and today we're talking about the Mega Backdoor Roth for Apple employees in their 401k. We will be covering the pros, the advantages, the what's the catch or the cons. Then we'll look at some common misperceptions, the reservations I sometimes hear from Apple employees. We'll then get on the technical side and we'll look at the first steps you need to take to put this in place. And then we'll wrap it up with a few pointers on how to make the Mega Backdoor Roth even better. All right, let's get started. Let's pretend we are 1,000 feet up looking down on contributions. The first bucket will be this one that has a limit of $20,500. We could make pre-tax contributions or Roth contributions here, but there's a limit. The IRS sets this and updates it every year. Bucket number 2, the company match. So in our case, we have assumed we are an employee in year 3 making $205,000 in base pay. You run the numbers, the company match will be $9,225. Now we move to bucket number 3, where the Mega Backdoor Roth makes its appearance. To figure out how much money we could contribute in this box, we take another number from the IRS. In 2022, that number was $61,000 for all contributions to the 401k. Then we would just subtract the numbers from the 2 first boxes and we would arrive at a figure of $31,275. So if we wanted to max this out, we would make after-tax contributions in that amount, and then to get them into or through the Mega Backdoor Roth mechanism, we would convert. And that would allow us to avoid paying taxes on investment earnings. So we could have some really efficient retirement savings using this feature. How much money could we put through that massive door? Well, if we didn't have a company match, we could put as much as $40,500 through the Mega Backdoor Roth. And let's imagine that we're 50 years or older, and in that first box we made Roth contributions. We could make contributions through the front and the back door of the Roth 401k in total some $67,500. So what are the advantages of the Mega Backdoor Roth? The first and most obvious is that we can put a lot of money to work, much more than we could through a Roth IRA, where the annual limit is just $6,000. And with the Roth IRA, there's a good chance you won't qualify because your income is too high. That's not going to be a problem with the Mega Backdoor Roth because there are no income limits that would preclude you from making a contribution to your 401k. Next, we love Roth accounts in general because we will enjoy tax-free withdrawals in retirement. And then lastly, we will enjoy more flexibility than with a traditional 401k. We can pull out the contributions if we choose to early and not pay taxes on them. There are some restrictions on the investment earnings we can talk about later. There's also a way to avoid required minimum distributions that we'll cover again very shortly. Now let's take a look at how the traditional 401k compares to the Roth or Mega Backdoor Roth 401k. The contributions for the traditional 401k, of course, will be pre-tax. And for any contributions that have Roth in them, they're going to be after tax. Then when we start taking distributions, we have the exact mirror image of these. So on the traditional 401k, we are now going to be paying taxes on the entire distribution. And on the distributions we make from the Roth 401k, they will be completely tax-free. Now, as far as required minimum distributions go, they are mandatory across the 401k. It doesn't matter what kind of contributions you made. However, there is a very simple workaround we are going to talk about in just a few slides. And lastly, as far as flexibility goes, you're going to enjoy more flexibility with the Roth portion of your 401k. That's with regard to fewer penalties and more flexibility in the timing of taxes. Again, that's going to depend on that workaround that we'll talk about very shortly. So what's the big catch? Well, the most obvious one is that you have to pay taxes before you make a contribution through the Mega Backdoor Roth. I think most of us already knew that. Also, there are some restrictions on withdrawals, especially early withdrawals of investment earnings. There's something called the 5-year rule that we'll get into in a different video. But the main takeaway is that there are fewer restrictions on the Roth portion than the traditional portion of your 401k. And then lastly, there has been some political football in Congress. There was the intent to get rid of the Mega Backdoor Roth. That didn't happen. That was in the first draft of the Build Back Better bill. It's hard to say. But it looks like we will have the Mega Backdoor Roth for some time, so let's make use of it while we have it. Now let's talk about the common misperceptions out there about the Mega Backdoor Roth. A lot of people think they make too much money to qualify. They're getting it confused with the Roth IRA, where that is very possible. Again, there are no income limits on a 401k that would prevent you as an employee from making a contribution. Next, I've heard people say, well, the investment selection in a 401k is so limited. That is not true with Apple. You could open a self-directed brokerage account and buy things like ETFs and individual securities, so that's not an obstacle. And then number 3, I hear people say, well, the money is just going to be locked up forever and I have no access to it. Well, there is some truth to that. We are planning for retirement after all. However, with the Roth 401k, that's what you're placing your money into, you can pull the contributions out early without penalties or taxes. There will be penalties and taxes on the investment portion and they will be prorated, but still you can get access to those contributions, and that's better than with a traditional 401k. So now let's set up this Mega Backdoor Roth with Apple. The first thing you're going to want to do is to make sure you've maxed out your 401k, this bottom box, in 2022 to $20,500. Then you'll receive the full company match. These are the assumptions for a particular employee at Apple. And then we'll look at the upper box where we make after-tax contributions. You decide how much you want to contribute. Next, we'll go on the Empower site. Under contributions, we will find after-tax contributions. And this is where we will find these tables, these sliders. Use the numbers that you've decided upon in the previous slide, and you're going to prorate them over the remaining payroll periods for the year. So if you're not at the very beginning of the year, you're going to have to be aware of how many periods are left and prorate whatever amount you want to contribute in after-tax funds. Once you've done that, you will convert the after-tax funds to Roth. Now, there's some bad news I have to share with you. You'll have to do this every 2 weeks at Apple because there is no automatic transfer that you can just set and forget. At other companies, they do have that functionality, but at Apple, they do not. So every 2 weeks, go on the Empower site, look for your after-tax contributions and convert them over to Roth. There'll probably be some investments already made and you will have to pay taxes on them, but not a lot of time will have gone by, so it'll be a very small amount. You'll pay this in retirement when you begin taking distributions, but the lion's share will be in the Roth, so you will have saved a lot of money and avoided a lot of taxes through the Mega Backdoor Roth. Now that we have the Mega Backdoor Roth set up, how can we make it even better? Well, in retirement, the qualified distributions from our Roth accounts are not considered income. So we could strategically lower our income, lower our taxes, avoid higher income tax brackets by managing our distributions. We could also do this to qualify for lower premium on Medicare Part B. There are, I believe, 5 different tiers, and the highest tier is about 4.5 times the lowest tier. So we could qualify for lower premium. That's a nice perk. And then finally, we should consider rolling over the funds from the Roth 401k to a Roth IRA. This will help us avoid required minimum distributions. This is the workaround I was referring to. And this can be really significant if we want to build up the balance of our retirement accounts. We can see what that might look like here. In this simulation, we've assumed that an employee has been able to delay withdrawals by about 10 years. So very significant difference in savings between these two scenarios. The only thing I would point out is that you should set up the Roth IRA 5 years before the rollover so that you can comply with the 5-year rule. And if you think you make too much in income to open a Roth IRA, we can help you set up a backdoor Roth. All right, so here's the mandatory disclaimer, and that concludes our presentation for today. I hope you found that useful and interesting. If you have any questions or have some issues you'd like to discuss about the Mega Backdoor Roth, reach out to me by email or set up an appointment through the Calendly link. If you have any colleagues or friends who would find this interesting, please send them a link, give us a like, and I look forward to hearing from you.